Hey, this is Max with Aura, and today we're talking about the difference between a credit lock and a credit freeze. Let's dive in. In 2021, there were over 5.7 million accounts of fraud, identity theft, and other scams. That's over a 17% increase from the previous year. It feels like every week there's a new data breach or a case of major fraud. Sometimes scammers can use the stolen information from a security breach to open bank accounts or lines of credit in your name. That's why locking or freezing your credit is one of the best ways to protect your identity, credit, and overall financial reputation. A credit lock and a credit freeze are similar in that they prevent unauthorized access to your credit file. However, they have a few key differences. So what is a credit lock? Well, simply put, a credit lock prevents creditors and lenders from accessing your credit history. They stop anyone, including you, from opening a new credit account. Under a credit lock, not even a credit card company would issue you a new credit card, which makes it a very appealing option if you're worried about someone opening a fraudulent line of credit in your name. Now, to lock your credit, you must enroll in a program with the three major credit bureaus: Equifax, Experian, and TransUnion. It's free to lock and unlock your credit with TransUnion and Equifax, but Experian charges a monthly fee of $19.99 to enroll in the credit lock program. But with a plan from Aura, you can conveniently toggle on and off the credit lock switch as desired straight from the Aura mobile app. Once you sign up with Aura, you'll have access to your credit files straight from either the smartphone or desktop app. If you want to lock your credit, just toggle the setting to locked, then toggle it back when you're ready to unlock. So when should you lock your credit? Some experts advise to only lock your credit under the suspicion of fraud. Others will advise a credit lock as a proactive measure, even if no fraud is suspected, out of an abundance of caution. Because you can immediately toggle on and off the credit lock, it's advisable to keep your credit locked 24/7 and only unlock it when you need to apply for a loan or you need to open a new line of credit. So what is a credit freeze? Credit freezes, also known as security freezes, will seal your credit history to help prevent identity theft and financial fraud. A freeze limits access to your credit information until you thaw your credit or remove the freeze. When an identity thief tries to open a new credit account in your name, a lender will first check your credit report and credit score to process the application. So will a credit freeze hurt your credit score? Placing a freeze on your credit does not impact your credit score, but it will stop credit bureaus from calculating your scores until you lift the freeze. So are there any downsides to freezing your credit? You'll need to unfreeze reports before applying for a legitimate loan, mortgage, credit card, and other accounts that require a credit check. And unfreezing your credit can take some time. It can take between 1 hour and a few days to thaw your credit. In cases where criminals already have access to your account, like when you've had your bank login information stolen, a credit freeze won't actually protect you. So what's the main difference between a lock and a freeze? Well, the main difference is really about how they work. A credit freeze involves going through a series of steps online, by phone, or by mail. Credit locks, however, happen instantly. You can lock your credit with an app on your phone or computer, but services like Experian will charge you a monthly rate to do that. That's why it's smarter to use Aura instead, since pricing starts at just $12 a month. So protect your credit today and head to Aura.com to lock in your 14-day free trial. We'll see you next time.